This is Maine Man Trader for February 10th, bringing you an update on the rout that took place in the market today. Starting out, you can see where we've had this confusion with our trusty summation indicator, which picked that top right at the beginning of January and gave us that nice month of profits, and then started to cause us some uh, confusion towards the end of January and on into this week. You had these several hiccups and an increase along with that reversal. You can see today the general trend is down, obviously, by price, but there is still a ray of hope for a bounce back on the summation, but I wouldn't hang my hat on it. The trend is obviously down. Here's the daily chart of the S&P, which shows that we came right down to trend line yet again. We were unable to break out above that range, which it really looked like it was going to do, moving up in the indicators, and then it immediately had a little attempted rally this morning that faded quickly and then fully retraced from the upper trend line to the lower trend line, and is sitting right there with quite a bit of technical damage done to the new rise in the MACD and the almost positive signal in the slow stochastic, and relative strength dropped decisively back below 50. The weekly chart looks much the same, and you can see the relentless downward movement in the 9-week relative strength index, the persistent price below the 21-week moving average, and that little confusing rise in the MACD that's been going on since the first of the year is still hanging in there, but our slow stochastic has still not given a buy signal, and that was clearly felt today. This is just another look at the S&P chart we use for trading intraday. Once again, you can see that failed little rise in the MACD, the kind of double top in the relative strength index, and the demise of all those incipient short-term buy signals that just failed miserably. Here's a look at the 15-minute chart, and you can see how this market just sank and died. There's a buy signal in here somewhere, but we'll get to that in a minute. Again, the composite took a big hit today, but still continues to hold up a little bit better, or it has farther to go if the decline persists. This would be a reasonable first stopping point if there's more follow-through tomorrow. If there isn't more follow-through, I think we'll see it in the composite first. This is a 60-minute chart. And again, a similar picture in the 15. There's a sense of improvement, but we'll take that with a grain of salt at this point in time. Mentioned throughout the day on the updates the activity of the trend, what we were looking for after the morning fooling around was for this to begin to improve as our buy signal. Obviously, it went the other way altogether in a fairly dramatic fashion. The trend can go quite a bit higher, and actually a few weeks ago did. And here's a 5-minute chart of the tick, just to show you that once that selling started, we had wave after wave of minus 1,000 tick and fairly lame attempts to snap back with no plus 1,000 tick by the end of the day. As I mentioned on the last update, the breadth was horrendous, with down volume and shares absolutely swamping the upside. On the options market, somebody started buying some Dow and some S&P index calls late in the afternoon. It wasn't an enormous amount, but somebody's taken a stab at it. Here on the S&P 60-minute chart, you can see something interesting, which is that each of these lows was met by each of these conditions, which are met now. And this would be as good a place as any for the bulls to make a stand and try to get a rebound. Should such a rebound occur, I think at this point we have to look to begin selling rallies initially, unless there is some significant turnaround in breadth and strength. So a nice setup would be to see some relief rally off of these oversold conditions somewhere in here, and then signs of that failing, and a place to get short. The market may not let that happen and could easily decline quite quickly from here as well. So we need to be open to that possibility as well. So going into tomorrow, unfortunately, I'm flat, or fortunately. Personally feel that I have been whipsawed about by this market over the last week. So being flat is important for me personally in order to take a pause. Took a small loss on an initial stab at some financial indexes this morning, and once that selling picked up, got out. Obviously, they're looking a whole lot cheaper now, so we'll keep an eye on those for a better entry point down the road, because I think that will offer some excellent return soon. Bear in mind that this is a very dangerous market, and so trade sure, trade small, or don't trade if you don't have a good feeling for it. That's all for tonight, and we'll post some charts as I find them interesting and keep you updated.